Hello, Lake County, Florida, and welcome to Around the House, sponsored by Romac Lumber and Supply. I'm your host, Don Magruder, and you're listening to my 790 AM WLBE in beautiful Leesburg, Florida. And I also like to welcome our viewers who are watching us today on Lake Sumter Television. That's LSTV and Appleseed Marketing, and it's on Bright House 199, Comcast 13, and Florida Cable number 4. Romac Lumber is the leading provider of building materials in Leesburg, and since 1945, local residents have been visiting the store at 700 East Main Street for all of their construction needs. Today, home financing and mortgages are major topics for most people, and lately there's been some big changes that many people are not aware of. With the New Year's fast upon us, it's a great time to update ourselves on home mortgages, especially if you're considering buying, borrowing, or refinancing a home. Mary Rhodes is the branch manager of the mortgage firm in Mount Dora, and she's joining us today to discuss home financing options, and she has an extensive background, plus she's a member of the Home Builders Association of Lake and Sumter County. Mary Rhodes is an expert in home lending, and I'm very happy she could join us today. With that, I'd like to introduce Mary Rhodes from the mortgage firm. Hello, Mary. How are you doing?
Hi, Don. I'm doing great. Thanks again for having me on your show.
Well, we're so happy to have you because every time we have you, people say, golly, that woman knows a lot. In fact, I consider you a mortgage expert, and we're glad to have you not only the radio show today, but also the television show. Mary, why don't we talk a few minutes and tell our listeners about your home financing background and who is the mortgage firm?
Sure. Well, Don, I have been in the mortgage industry since 1984, working in various capacities, underwriting, processing, auditing. And 20 years ago, I went to work for the mortgage firm as a loan originator.
Mm-hmm.
And so today I'm a senior mortgage consultant, and I'm the Lake County branch manager of our Lake County office, which is located in Mount Dora.
Now, one thing about the mortgage firm, you are not just in Mount Dora. You have multiple offices throughout Central Florida. Can you give us an idea what the footprint of the mortgage firm is?
Sure, yes. The company did start back in 1995, and over the years, despite the downturn in the market, we have grown to become one of the largest private lenders in the state of Florida. So we now have 19 branches throughout Florida, and they're located anywhere from Jupiter to Fort Lauderdale, Tampa, Clearwater, Daytona, and then, of course, the Lake County branch.
So needless to say, because you're a statewide group, if someone were looking at needing home financing in Marion, Sumter, or Lake County, or even parts of Volusia where the show goes to, you guys could help them.
Sure, absolutely.
Okay, real quick, how do people find your office? Because, after we get through the show, a lot of people's going to want to contact you. First off, we need a phone number and where your office is, and because I'm sure folks are going to have some questions. You bring up good points.
Sure. Well, I can be reached at my office, which is the phone number is 352-383-3046, or I can be emailed, mary@themortgagefirm.com, and my actual physical location is in downtown Mount Dora, 620 East 5th Avenue in Mount Dora.
Mary, I guess this is the $64 million question. Is the mortgage firm lending money? Because all you hear is that people can't get mortgages, and do you see mortgages and home lending easing up now?
Well, we are closing a lot of loans. We are lending a lot of money. And actually, year to date, Don, we've closed, just the mortgage firm has closed a little over $600 million in loans, which is more than we did last year. So I wouldn't say that it's difficult to get a mortgage, but I would say that it's very document intensive. So we require a lot of financial documentation, a lot more so now than we used to.
And I think we probably need to clarify this. This is not a case in which the mortgage firm is requiring it. This is the overall direction of the industry, isn't that correct?
That is correct. All the agencies are requiring more documentation than ever.
You know, Mary, it amazes me. the government, from all their programs and even in business, there's a push to go paperless.
Hmm.
But the mortgage industry has reverted back to go with more paper, and it's almost like they've stepped 2 or 3 steps behind. Uh, Why am I wrong that most of it does have to actually have a hardcore paper with it?
Well, we do require more documentation. However, we are paperless. so
Okay.
so we receive all the documentation in paper format, but then everything is scanned and turned into a paperless file.
Now I understand you tell me you've told me that after you from the initial application process to the final point in which someone receives a house, they will have a stack of paper, and you said it's how thick?
Take a guess, Don. How many pieces of paper do you think are in a loan file from time of application to time of
I
closing?
would say 200.
850.
850.
Yes. Can you believe it? That's how much documentation is required now to get a loan.
So I guess people need to be prepared when you're applying for a home loan or something similar. You get ready to fight the maze of paperwork.
That is correct. If you're thinking about buying a home, save your tax returns, save your bank statements, and anything to do with your finances. Just save it, keep it organized because we're going to need it.
I understand there's been some changes in government-backed loans. Can you give our listeners a brief description of what Freddie Mac and Fannie Mae are? People hear
Hmm.
that all the time, and
Yes.
some people naively think it's a person. But tell us what Freddie Mac and Fannie Mae do as far as mortgage lending.
Sure. Many people have heard of Fannie Mae and Freddie Mac, but what do they really do? What they do is they take all of our closed loans, they bulk them together and turn them into mortgage backed securities, which are then sold on the secondary market to usually major investors, institutional investors, life insurance companies, pension funds, even other countries purchase our mortgage backed securities. And what Fannie Mae and Freddie Mac do is they warrant to these investors that these loans are good, safe investments that have been underwritten to the standards that they put forth to our underwriting departments.
And technically, that's what happened in 2008 that made the housing collapse. First, they had all these mortgage-backed securities, and the loans were not good loans. They were based on erroneous values and erroneous documentation. Loans were not solid, and hence that's sort of the meltdown of the whole economy.
Lack of regulation, easing of standards, and quite frankly, greedy investors who wanted more return for their money. So they were willing to invest in loans where we did verify income, willing to invest in loans where the credit scores were very low. They wanted more return for their money, and so the investors wanted those loans.
So now, to guarantee that these mortgage-backed securities are correct, they're now demanding all this documentation that they're indeed bona fide loans to bona fide people, correct?
That is correct. Our loans today are performing much better than they ever have.
Okay. You're listening to Around the House, sponsored by Romac Lumber. I'm your host, Don Magruder, and we have a very special guest with us today. She's Mary Rhodes from the mortgage firm located right here in Mount Dora. We're talking about mortgage lending and how to get a loan, and going to have a great conversation. We were talking about Freddie Mae and Freddie Mac and Fannie Mae, and I got a good description of what they do. But one thing's been reported lately that the Obama administration, through Freddie Mac and Fannie Mae, they're potentially easing standards. First off, is that true?
Well, there's always talk about easing standards, make it a little bit more easier for homeowners to purchase a home. And the problem I see with that, though, is the mortgage meltdown is still quite fresh in our minds.
Mm-hmm.
So even though easier standards are being introduced, it's really up to the lenders to adopt these new policies. And a lot of us just are not willing to do it because of all the problems we've had in the past. So I wouldn't say that guidelines are getting easier, but we are still lending a lot of money.
Uh, Now, I've heard some of the standards they're talking about easing is shorter waiting periods for potential homeowners who've experienced some type of short sale or foreclosure, or some type of financial distress.
Mm-hmm.
Uh, I've heard it's going from 2 years to 1 year, and then I've also been told, but the regulations have gone from 2 to 4. Can you
Mm-hmm.
get me clear on some of that?
If anything, that's getting a little bit more strict.
Okay.
So, USDA loans, for example, up to December 1st, 2 years after a short sale, you could qualify for a USDA loan. Now it's 3 years.
Okay.
And conventional loans used to be 2 years, now it's 4 years. So, really, to the contrary, it's not really easing standards, it's making things a little bit more difficult in some circumstances.
Do you think the reason why those periods may have grown a little bit is the farther we get from 2008, 2009, the actual events of the foreclosure meltdown, they figure now people should have their house in order?
I think that's probably a good way to sum it up, sure.
Okay. As far as the mortgage firm and what you're seeing, Mary, have you seen any relatively easing of standards for people to get loans in any way?
I wouldn't say the standards are easing. I would say that there are certain things that we understand more than we ever used to, for example, credit scoring. And so we do have more tools available to us because of technology that we can actually help people to qualify quicker.
Okay. Let me ask you a question like this then. If you have, let's say you're someone who in 2009 had a short sale foreclosure or maybe a bankruptcy, and we're now sitting here 5 years later, but 2 years ago you looked at trying to get a home, totally different environment, 2011, 2012. Should people consider reapplying now and maybe their own credit healing and things have happened that could allow them to get a mortgage?
Oh, absolutely. Even if you know for a fact that you can't qualify right now, let's have a conversation. Let's see where you stand. Let's look at your credit, and maybe you know that you're going to have to wait another year to qualify. Well, let's get everything in order now, and let's see if there's something on the credit that needs to be fixed or addressed, and we can take care of that now while we wait that extra waiting period.
So you offer part of your services, maybe a consultation on how you can get to the point of repaired credit or repaired situation so that you can qualify for a home loan.
Absolutely. I work with some real credit experts, and together we have been able to help many people go from not qualifying for anything to purchasing a home.
This segment of Around the House is sponsored by Thermo True fiberglass doors with their new Jam Saver jams and trim. If your old steel door is dinged up, rusted, and with a rotten door bottom, let me tell you about the new Thermo True fiberglass door with Jam Saver jams and trim. These doors look like real wood, for example, but they're fiberglass. Plus, they don't rust or ding, and the insulation value is amazing. The doors are then put in a Jam Saver jam with a PVC composite brick mold, and what you have is a door that's virtually maintenance-free that will last a lifetime. The Romac Lumber Door Shop in Leesburg can organize your fiberglass doors with a variety of glass inserts and sizes, and you can have the prettiest door in the neighborhood. For more information or to see these great Thermo True doors, call the Romac Lumber Door Shop at 352-787-4545. Plus, if you need installation, your door can be installed. It's no problem with Romac doors. Give them a call at 352-787-4545. And we're having a dynamic discussion with Mary Rhodes. She's manager of the mortgage firm right here in Mount Dora, talking about lending, home lending, and getting loans. And we've got a lot to talk about. You mentioned earlier about credit scoring. Mary, there's been some big changes in FICO credit scores. First off, could you tell us what FICO credit scores do and talk about some of the issues that's been changed, and could that potentially help you in getting a new mortgage or a loan for something else?
I'm so glad you asked, Don. I've been really excited to talk about this. But FICO scoring model, that's the credit scores.
Mm-hmm.
Those are the scores that we use, of course, to evaluate someone's credit. And in order to qualify for a mortgage, for the most part, you need to have a 640 credit score. Now, FICO or Fair Isaac has changed their scoring model to where they don't necessarily consider medical collections in the score. And it's their feeling that if someone has medical collections on their credit report, that's not necessarily an indication of whether they have the ability to borrow money and pay it back on time.
Okay.
So if somebody has medical collections on their credit report, then it could be with the new scoring model that their scores are 20 to 30 points higher than would have been if the collections were being considered in the score. So that's going to really help people across the board. Now, up to this point, Fannie Mae and Freddie Mac have not adopted these new scoring models because there's no real history of how these loans will perform. But just recently, they have said that they are open to looking at these new scoring models and starting to test them on a case-by-case basis. So that could be great news for a lot of people out there.
Wasn't there also some considerations if you had a credit issue that involved a foreclosure or something like that, maybe not hitting you so much on the FICO score also, or has that not really been adopted?
That has not been adopted. Everything up to this point has been talking about medical collections.
So once again, if you've had a medical collection, say you had a child get sick and you're unable to pay that bill, but that's something that they're given some better choice of words, maybe leniency. It's no guarantee, but it sounds like they're looking at things a little differently.
That's correct.
Okay. Now, I know there's ways to check your FICO score and get good information. Can you tell us how someone can check their FICO score and what should they be looking at?
Don, it's just as easy as freecreditreport.com. And I would suggest that everybody check their credit score at least once a year just to see if there's anything that's popping up that needs to be addressed.
You handle a lot of people getting mortgages. What can you do? What are some of the easy things you can do to protect your credit score or maybe improve it?
Well, first of all, you need to have credit.
Right.
Some people come to me and I pull their credit report and they have no credit. They think paying for cash is the way to go. But you have to be able to show that you can borrow money and pay it back in a timely manner. So you really need to have at least one credit card. An installment loan helps, but just having credit and using it is important. Some people will have credit cards, but they'll never use them. So you have to be able to use your credit and show that you're able to borrow money and pay it back.
Mary, a lot of seniors, we have a lot of seniors here in the area, and a lot of seniors believe in the old cash system. But I've heard frequently that most financial people recommend that seniors maintain some credit lines to keep their credit scores in line so that they can get money as they need it. Do you find that's important for seniors?
That's very important, and something that I see from time to time with seniors is they don't have an interest in using their credit, so they'll close all their accounts.
Mm-hmm.
That's about the worst thing that you can do. If you have a credit card, have an account opened, leave it open, don't close it, because that open account will continue to report with your scores. If you close it, then it's no longer considered in your scores.
So an inactive account is better than a closed account?
Yes.
Okay. What other, as you look over 2015, whether it's FICA, regulations, or paperwork, what other big changes do you see?
Well, what we are seeing is there is the emergence of more alternative lending sources.
Okay.
So not everyone fits into the guidelines of Fannie Mae and Freddie Mac or FHA. And so there are a lot of good people out there that want to buy a home, but they just don't meet those agency guidelines. So we're starting to see more private investors come out with easier guidelines, and they're loans where you're going to pay a little bit higher interest rate, but for that self-employed person that can't provide tax returns to prove income, instead they can provide 12 months bank statements which shows deposits. Something like that would be one of these alternative lending sources.
Do you see that significantly becoming a bigger part of the market?
I do. I knew that these loans would start to come back, and that's what we're seeing now.
So essentially what you're saying, investors who are not satisfied with the low returns of the fixed money markets, and so they're going out and actually holding paper on loans and getting a little bit better rate on the loans than others, correct?
That's correct. And these are loans where people have got a good credit score, but they're 1 year out of a foreclosure. They're self employed, but they can't verify their income. They're loans like that.
Why don't we, if someone were looking to buy a house, take us real quick through the process of getting a loan. What's the very first thing you're going to do?
Well, the first step is just a simple conversation, Don. I would love to talk to anyone who is thinking about buying a house.
And what phone number would they call?
They could call me, Mary Rhodes with the mortgage firm, at 352-383-3046.
Okay, so they're going to call you,
Call.
and what's going to happen during that conversation?
Well, I'm going to get to know you a little bit better, and I'm going to find out where you work, what your income is, how much money you want to put down, where you want your payments to be, your monthly payments. And we'll talk about your credit scores. I'll run some numbers, and we'll determine what's the best loan product for you to qualify for now or in the near future if you don't qualify right now.
Wouldn't you say, and I've talked to other lending experts like you, isn't it very important that when people make this call that they're very frank and honest? Sometimes pride has a propensity of getting in the conversation. People will say, I can afford more than I can really afford, or I have more debt. You've probably seen it all, haven't you?
I have, and I'd say most people are really conservative nowadays as compared
Okay.
to years ago when we had the boom. So people want to live within their means. So we're seeing a lot of that.
Okay, so they've called, they've
hmm
had a discussion with you. They say they want a loan. Then what happens afterwards?
Okay, if everything looks like it's going to work and you're happy with the monthly payment, you've got the money to put down, then we consider you to be pre-qualified.
Okay,
So the next step is for the new homeowner or potential new homeowner to provide documentation, income documentation, tax returns, pay stubs, bank statements, and documentation that will back up everything that you told me. I review the documentation, I issue what's called a pre-approval letter, and a pre-approval letter in hand puts you in the best negotiating position for making an offer on a house because that tells the seller that you're good for the money. So you really need to have a pre-approval letter. Once that letter's in hand, you find a house, you make an offer, your offer's accepted, then usually about 30 days from time of contract to time of closing.
so what you're basically saying, before you even start your search for a home, you should make that call and get pre-qualified, and then gather all your information and get a pre-approval letter.
Yes, I mean, if you're going to make an offer on a house, don't you want to be in the best negotiating position possible? With a letter in hand, that will allow you to be so.
And Mary, after that, then you go find the house, and then I take it you go into the process of closing the loan. And typically, how long does the loan take to close these days?
It's about a 30-day process.
So you find the house, you negotiate the price, then it's going to take a 30-day process. So from start to finish, your best case scenario, you're probably looking at 2 months, aren't you?
Probably.
I've heard horror stories they're going as much as 3 and 4 months.
Oh, yeah. Yeah, it depends, and it depends on the house that you're making the offer on as well. If it's a short sale home, that takes a while to negotiate. It just depends, really.
Well, we're having a marvelous conversation with Mary Rhodes. She's the manager of the mortgage firm here in Mount Dora. And when we come back, we got a lot more to discuss, and we're going to talk about reverse mortgages because I've got a lot of questions about that. We'll see you in a minute. Welcome back to Around the House, sponsored by Romac Lumber. I'm your host, Don Magruder. We've had a very informative discussion thus far with Mary Rhodes. She's the manager of the mortgage firm right here in Mount Dora, and we've got a lot more to discuss and a lot more information, but I also want to remind our listeners and viewers, don't forget to catch the Around the House column every Saturday in the Daily Commercial and Wednesdays in the South Lake Press, and be sure to tune in to Around the House, the radio show, Mondays at noon from 1 p.m. on WLBE 790. We've got all your home improvement and construction information needs, and we try to give you a variety of shows. Last week we had a show on plants with our good friend John Squires from Just Perfect Plants, and today we're talking with Mary Rhodes from the mortgage firm. Mary, one big issue around here with our senior population is reverse mortgages. Now, I must admit, I know a little bit, very little bit about reverse mortgages, but I'm sure there's a lot of seniors, especially the folks who are traveling down here or winter residents, there's a lot of questions. And I want to have a frank discussion about reverse mortgages, what's the advantages and disadvantages, and I understand the mortgage firm does quite a few of them.
Yes.
First off, how long have you guys been doing reverse mortgages?
We have been doing reverse mortgages for about 10 years now.
Okay.
Yeah, it's a great product. There's nothing else like it.
And reverse mortgages go back to the Reagan administration, don't they?
They do, yes. The concept itself was introduced by Senator John Hines back in the late 1970s, and then was signed into law by President Ronald Reagan. And the first reverse mortgage closed in 1981.
So we're talking 34,
35,
yeah.
That's right.
How does a reverse mortgage work?
Well, it allows a senior, 62 years of age or older, to take the equity in their home and receive that equity as either a lump sum of money or a line of credit they can access anytime or a monthly payment that they would receive for life. And there's no mortgage payments that need to be made on it.
Now, let's qualify a couple of things. You do, correct me if I'm wrong, there's only a certain amount you can take equity. You can't take the full equity of your house.
That's correct.
Well, I mean, I want to get very elementary because, once again, a lot of people get confused on this, and there's a lot of seniors listening, and I think we need to make sure everyone fully understands it. Equity is the amount of money that you have in your house from what you owe on your house to the appraised value. Not what you normally paid for it, the appraised value as of today, correct?
That is correct.
So, for example, you have a house you've been living in all your life. Say you paid $30,000 for the house, but today it's worth $150,000, and you owe nothing. So you have, let's use that as model. You have $150,000 equity.
That is correct.
Now, out of that $150,000 equity, how much can they borrow on a reverse mortgage?
Approximately 50%.
That's what I thought. So $75,000 is available on a reverse mortgage. So once again, say you bought a house 30 years ago or 40 years ago for $30,000. It now appraises, if we call it an appraiser, $150,000.
Yes.
You owe nothing for it, so you have $150,000 equity. That means you got $75,000 that's available to be purchased on a reverse mortgage. All right, now that's $75,000. Say I apply for a reverse mortgage loan. Can I get the $75,000 in cash?
Yes.
Okay.
You can. You can get it in a lump sum, or most people like to get like the line of credit option. They don't necessarily need all the money up front. And that's what I recommend. If there's not an immediate need for the money, it's best to take a line of credit because you see interest is going to accrue on that balance. So if you don't need the full $75,000, then why take it all? Because your interest is going to start accruing. So if you really only need maybe $5,000 from it, get the line of credit for $75,000. Take your $5,000 at closing. Then your interest is only accruing on $5,000.
And the $75,000 line of credit is usually accessed through a separate checking account, correct?
Right, correct.
In other words, you'd have your own special checks for this credit line.
That's correct.
All right. Now, if someone wanted to get a payment amount, how do you determine how much payment each week to get?
It's a monthly payment, and it's really based on the age of the applicant. The older you are, the more money that you can get.
Okay.
Okay. And some people choose a combination of those. Say somebody wants to supplement their income, it would be very beneficial if they had income of an additional $200 a month. So they'll take that, and then the rest of the money they'll get as a line of credit that they can access whenever they need a lump sum. So you can do a combination.
Okay. All right. We've talked about the money you're getting and how you get it. In other words, we've talked about how much equity you get what equity is, how much equity you get, how you get the money. But here's the rub. how does the lender come out? And you know, we are all trained, especially seniors. We're all trained that there's nothing for free. All right. What if you outlive your money, and what happens at the end when you die or you move or whatever? For example, let's take the scenario. Bought a house 40 years ago, 30,000, worth 150 today. You owe zero on it. You get 75,000. You take a lump sum. All right. You don't pay that back, correct?
You do not pay that back. That loan does not have to be paid back until the home is no longer your primary residence.
Say you live for 20 years beyond this. In 20 years, what happens?
Okay. Say your initial payout was $75,000. Let's say you took the full $75,000. Okay. So you're not making monthly payments, and interest is accruing on the loan. So 20 years ago, you're...
Can I make the point?
Yes.
In other words, what is the interest rate on most reverse mortgages now?
It's going to range anywhere between 3 and 5% right now.
Per year?
Per year.
Okay. So a 3 to 5% interest rate per year is being added on to the equity you got.
That is correct. So if you start out with a loan balance of $75,000, and then 20 years from now, that mortgage balance, it may be, depending on interest rates, let's say you may then owe $110,000.
Okay.
Let's just say. Okay. So you owe $110,000. Now your home, which was worth $150,000, is now worth $200,000.
Okay.
So now you owe $110,000, your home's worth $200,000, and you are ready to move. You don't want to live in the home anymore. You want to move to assisted living or wherever you're going to be moving to with your children or whatever.
Or say you pass away.
Exactly. So then the home is sold, and that equity left in the home, which is the difference between the reverse mortgage balance and what the home's currently worth, that equity goes in your pocket or it goes to your heirs.
Okay. So the challenge for anybody getting a reverse mortgage is that the reverse mortgage has to be satisfied along with interest rates at the time of death or the house is sold.
Correct.
Isn't the other issue with reverse mortgages you buy an insurance each year, a government-backed insurance to guarantee that the house never goes down in value?
That's correct. Reverse mortgages are FHA loans. So they are backed by the government, and one of the safeguards built into the mortgage is this mortgage insurance. And what it does is it ensures that you'll never owe more than your home is worth. So if you get a reverse mortgage and the balance goes up to $100,000, the market tanks and your home's only worth $80,000, and you need to sell your home, there's a $20,000 deficit balance there. Well, guess what? The government takes care of that.
So
it's not the responsibility of the homeowner.
So it's real important. So how the lending institution gets paid, and that's always the question, is number one, the lending institution's going to get their principal plus interest, which is 3 to 5%, plus they're going to get reimbursed for their fees and also the government insurance. And at the end of the day, whether the end of the day is you selling your house or whether it's your death, that amount of money has to be taken from the proceeds of the sale of the house.
That's correct.
And if it's a negative balance because you're getting this government insurance every month, say the home deteriorates and it's not worth $150,000, say it's worth $50,000 at the end of the day, then you're not obliged to pay the difference.
That's correct.
A lot of questions about reverse mortgages, but
yes,
I'm going to say something sort of out loud. For a senior who has limited heirs, that's sort of a good deal, isn't it?
It is. It is. If you own a home and you are just insistent that all the equity go to your heirs, then the reverse mortgage may not be the right product for you.
But if you own a home and say you have children that are struggling and you want to help them while you're still alive, this is an opportunity to basically get their inheritance out and help them prior to your death.
That's one of many reasons why people get reverse mortgages. That's correct.
So reverse mortgages seems like a great product for seniors.
It really is.
You know, and a lot of it has to, I think the struggle with reverse mortgages is a lot of people don't understand them, and hopefully we clarified it today. Now, I'm sure there's going to be questions about it. Mary, if someone wanted to talk to you particularly about their reverse mortgage situation, what's a good phone number they can call
I
you?
would love to hear from anyone in our audience today, Don, and I can be reached at 352-383-3046.
Now, Mary, is there any particular age limit? Can you be too old to get a reverse mortgage?
Not at all. There's no age discrimination going on here. You just have to be at least 62 years
Okay.
old.
And is there a top out, the most amount of money you can get out of a reverse mortgage?
Once you get into homes that are valued over $625,000, then there is a cap.
So there is a cap for the much bigger homes.
For the bigger homes, correct.
And I guess to wrap up our discussion on reverse mortgages, what's the biggest misconception do you see on reverse mortgages?
Probably the biggest misconception is that people think that when you enter in a reverse mortgage that you're actually signing over your home to the bank or you're signing over your home to the government, which is just not the case. You always remain entitled to the home.
Basically, the government becomes a lien holder. In other words, they're a mortgage holder on the home till the end.
In so many words, yes, correct.
Okay. And the final question on reverse mortgages is probably the most important one. I heard that credit scores are really not a big deal in reverse mortgages. Is that true or false?
That is correct, because when you get a reverse mortgage, you don't have to make payments.
So because you're dealing with equity, it doesn't matter your ability to pay.
That's correct. Your ability to pay doesn't really come into play.
Okay. So once again, it's a great deal for seniors. It's a lot of questions, but like any financial product, you really need to get with the expert and discuss your particular needs, correct?
Yes, for sure.
Now, we talked, the mortgage firm's a full-line home lender. Let's talk about the various type of loans you guys do.
Sure.
Do you do conventional bank financing?
We do, yes. And I will say that we are a direct lender, the mortgage firm. We are a direct lender. We lend our own money. We make our own decisions.
Okay.
And
now, you were talking about private lending earlier. Do you do private lending?
We are not a portfolio lender.
Okay.
We do underwrite to all the agencies.
You do underwrite. But so basically you're doing what I call conventional bank financing, but conventional lending. What's the pros and cons of conventional lending, Mary?
Conventional lending, which is Fannie Mae and Freddie Mac,
Mm-hmm.
those are a little bit more difficult to qualify for than your government loans. But you can get a conventional loan, put as little as 5% down. If you can put 20% down, that's ideal, because then you don't have to pay that monthly mortgage insurance.
So 20% down or more, you don't have to pay the monthly mortgage insurance premium.
Correct.
Okay. But you say they're more difficult to get
Well,
or qualify for?
It's just a little bit more difficult. Your scores need to be a little bit higher, and the interest rates can really be skewed. If your scores are on the lower end, your interest rate could be higher.
And FHA, do you do FHA lending?
Yes, FHA is a great product. Only 3.5% down is required.
Uh-huh.
Now, that does require mortgage insurance.
Now, let's talk about what mortgage insurance is, because, once again, there's a lot of people watching and listening. They have no idea what mortgage insurance. Can you explain that to us?
Sure. Mortgage insurance does not protect the homeowner in any way.
It protects the lender.
It protects the lender in case you default on the loan. That's correct. Now, on a conventional loan, if you put down less than 20%, you carry that mortgage insurance. However, the mortgage insurance can be dropped once you do show that you've got 20% equity in the property. On FHA, you pay the mortgage insurance, and it cannot be dropped. You have to carry that mortgage insurance for the life of the loan.
So that mortgage insurance, FHA, the pros, it's easier to qualify because you're buying the mortgage insurance. What's the cons?
The mortgage insurance is expensive.
How expensive is it, Mary? I hate to put you on the spot, but say your regular note would be $1,000. What would that add a month to it?
It would probably add about $200 a month to your payment.
Oh, so to go to $1,200.
Yes.
So it's pretty expensive stuff.
It is. It's more expensive than conventional mortgage insurance. So FHA they have increased the mortgage insurance factors over the last few years, probably 3 or 4 times.
But the advantage is low down payments. So if you found the home of your dreams and you couldn't come up with the down payment and you couldn't qualify at the higher level, it's a way of getting you in the house.
It's a way of getting you in the house, and what I recommend is that we get your credit and income to a point where we can refinance you out of that FHA loan within a couple of years.
Heard a lot of good things about VA loans. Are you guys doing VAs?
I love VA loans. Yes, we're doing so many VA loans right now, and that there's no money down, and there's no mortgage insurance.
Okay.
So there's nothing like it. Great product.
And those are government backed, aren't they?
Correct.
Qualification, are they fairly easy to qualify? They're not like going to the VA hospital, are they?
Oh, they're not like going to the VA hospital. No, the guidelines are quite easy on VA loans.
And and you've got people to work with veterans, and whether you're a veteran of 2 or 3 years or someone who served 30 years ago, you can work with them, right?
That's correct.
Okay. USDA loans, hear a lot about that. And tell me if I'm wrong. I've been told that because Lake County and Sumter County is in a rural area, USDA loans are available, but there's been some caveats about USDA loans being funded and have the ability to get to them. What's the deal on USDA loans?
That is a great product, Don, and we are so fortunate to have that product available to us out here in Lake and Sumter counties. If you're purchasing a home in Orlando, you can't get a USDA loan. It's no money down. There's no mortgage insurance. There's a small USDA fee that's added to your payment every month, maybe only $30, $40 depending on the sales price, but it's just a great product. Now, they talked about changing the maps to where some of our areas would not qualify, but they have decided to leave the maps the same for the next year. So till next October, we all still have USDA financing.
So if you're downtown Eustis, they're looking as if you're in rural America. And correct me if I'm wrong, the purpose of this program was to help people in rural America get homes, correct?
Yes, the purpose of the product is to promote home ownership in rural areas, yes.
So it's a great product. So realistically, if you're searching for a home in Lake or Sumter County, you should consider that USDA product, shouldn't you?
Yes, absolutely.
You're listening to Around the House, sponsored by Romac Lumber. I'm Don Magruder, and we're having just a super informative discussion with Mary Rhodes. She's from the mortgage firm, and there's nobody probably more experienced or more knowledge here about mortgages in Lake and Sumter County. And Mary, we've talked about the various products. Let's sort of talk about refinancing and lines of credit. Do you guys? I've been told refinancing homes have sort of been on challenge here lately because of they've gone through their course. Do you see many people refinancing homes now?
People are refinancing, and we've seen an uptick in those applications just because rates have stayed so low. They've actually gone even a little bit lower, which I think we'll probably talk about that in a minute.
Yep.
But yes, there's definitely refinance activity out there.
And what about lines of credit? Before the meltdown, if you had a lot of equity in your house, you could get a line of credit, and you could use it for things. Are people lending institutions offering lines of credit now, or is that something?
They are, yes. Usually not up to 100% of the value like they used to do. Usually it's up to 80 or 90% of the value. But home equity lines of credit are available.
We talked about rates a few minutes ago. I know you cannot particularly quote a rate because there's so many things going in. But general range, I'm hearing the rates are somewhere mid 3s to 4s. Is that accurate?
That is a very accurate range, yes. Yes, I'm really quite surprised that rates have stayed this low for so long.
Isn't the general feeling, though, Mary, that the rates aren't going to go any lower, and really the only way to go on rates is up?
Probably so. And, let's take a look at why rates have stayed so low. It really has to do with global uncertainty.
Right.
There's a lot going on in the financial markets overseas to where investors want to park their money in safe havens, and our mortgage bonds are considered a safe haven for the money. So rather than investors putting their money into stocks, they want to put them in bonds, which is what mortgage-backed securities are. So that is what has kept rates so low. Now here locally, consumer sentiment is really improving. So as we start seeing some improvements to our economy, you're going to start seeing rates going up.
So you're predicting rates to go up?
Yes.
This segment of Around the House is sponsored by All Star Garage Door Openers. The best and most popular garage door opener in Lake and Sumter County is a durable chain-driven garage door opener from All Star. This heavy-duty opener is a workhorse in the villages and other communities and has a reputation for dependability. With a full line of openers and remotes, Romac Garage Doors can take care of your service and installation issues. Lose a remote or, say, had a remote picked up and taken away from you? Give them a call at 352-748-4575. That's 352-748-4575, and let Romac Garage Doors solve all your garage door needs. One of the issues in getting home loans are several issues. In fact, let's just sort of go through the litany of issues that have been problems in the last few years. We talked about the rates are low now, so rates are good. Talked about all the paperwork, but some of the issues is home appraisals. How do you see appraisals? Are people finally starting to get the appraisals they need to get loans?
They are. We haven't been having appraisal problems like we used to. And, Don, my husband's a real estate appraiser, and we were talking over the weekend, and he says that for the most part, for Lake and Sumter counties, most areas are considered to be value-wise, are considered to be stable or increasing. Very few areas are declining anymore.
Kevin Branch, who I had on last month, though, he's a local realtor. He told me, however, you still have to price your property right.
Oh, you do. Sure, you do.
We're still a long way from 2005-6 levels. Best I understand, we're still probably about 25-30% below that level. Is that what you're seeing?
Yes, I would agree with that.
We're still a quarter to a third off of the prices of 2005. So if you're underwater 2 years ago, you're probably still underwater. Home inspections. Had a show a month ago on home inspections, and that's a big deal when you're buying a used home, isn't it?
Yes, most people get home inspections nowadays. Now, they're not required for lending purposes. It's really just for the purpose of the potential homeowner. And it seems like almost every home inspection comes back with something on it anytime you buy an existing home. But I've been seeing a lot of deals still take place, even though there are issues. Repairs are being negotiated and deals are still going through.
One thing I have heard that's blowing up some deals, and you tell me if you've seen this lately, is home inspections that's identified issues or insurance inspections that have identified big issues like roofs and major electrical issues, and the insurance company just said, or wind mitigation issues, just say, hey, we won't cover the home. Have you seen any of that lately?
We have had some homes that we had a very difficult time getting homeowners insurance. And most insurance companies, depending on the age of the home, they will require what's called a 4-point inspection. And if one of those 4 points fails, it's very difficult to get insurance.
So that's the reason why you need a good home inspector to come in there and do that.
Yes.
I guess along those lines, code upgrades and city utility approvals, once again, when you're buying a house, you got to make sure that you're within code, because I've been told people have actually bought houses and they go to get lights and power cut on and say, oops, you can't do it because you got to upgrade things. Have you seen some of that?
We have seen some of that, and we've seen people purchase homes where there were room additions that were never permitted. So if you're thinking about selling your home, or even if you're not thinking about selling your home, if you're going to do something major to your home and it's supposed to be permitted, get the permit.
I've noticed that lately. They have gone back, and instead of just accepting that the room you've added or the improvements you've added, if you haven't done that, they're going to make you go reach back and make you pay the permit fee.
That's correct.
And the sad thing about doing a permit afterwards, you've got to get an architect, engineer, and you still got to draw it out and verify it, and it's a lot bigger deal, isn't it?
I know. Just do it right the first time.
Talked a little bit about income verifications. Income seems, we still do have a fair amount of people who work for themselves. What type of income verifications, and I've heard this is blowing up some deals. If someone's working on their own, what do you need? What can they provide to verify that income?
Income verification today is providing tax returns, pay stubs, W-2s, 1099s. We do what's called a 411 on the business. We get a written verification of employment from the employer. So we check income from all different on all different levels.
Now, a lot of these questions can be answered on your website. If someone wants to check the website out, what website address can they use, Mary?
It's www.mortgagefirmpros.com, or I can be emailed, mary@themortgagefirm.com.
Good. And Mary, what about construction lending? Is the mortgage firm doing construction lending?
We are. If you want to build a home, we can handle the financing at the end. And there is more of that going on now than there were a few years ago. With the inventory being low, there's only about maybe 2,500 homes on the market right now. People are looking at new construction options.
But it's also a few more hoops, getting a plan appraised and all that.
Yes, correct.
So you need someone to. You're almost to the point you handhold people through the process, don't
Yes, I do.
you?
And I love doing it.
Still got foreclosures and short sales on the market. Do you help people with finance, or can you help people finance a short sale or more foreclosure?
Oh, absolutely. It really doesn't matter to us what home you buy. We just give you the money to buy it. So it doesn't matter if it was a foreclosure, short sale, or just a regular existing home.
But there's some real hoops in getting a foreclosure or short sale financed, aren't there?
Well, the problem that we see with those is a lot of times the home is not in the best of condition.
Mm-hmm.
So sometimes we run into issues with the appraisal, repairs being required, because especially on these government loans, the appraisers got to look out for the health and safety of the borrower.
All right. Well, Mary, just real quick, what would you say if someone's looking at getting some type of mortgage lending? What's going to be the keys to successfully securing mortgage lending, whether it's reverse mortgage, refinancing a new home? What do you see as the keys to getting that financing?
The first step is getting pre-qualified, Don. Just know what your payment's going to be, know how much money that you need, and let's talk about all the different loan products out there because there's a lot.
Well, Mary Rhodes from the mortgage firm, we thank you for all the information you gave us today. It's a great discussion. I hope you learned a lot and would like to thank you for listening and watching Around the House. Be sure to tune in next Monday. Until next week, we'll see you around the house.